All right, welcome into Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thank you very much for tuning us in here today. It's the 4th of March, all day today. And we've got it's a jam-packed week as far as economic and USDA news. We got a report Wednesday, but also at the end of the week, we've got a non-farm payroll number. And at the end of the month, right, we've got acreage. So we're going to have lots to talk about. So I'm glad you tuned us in here today. Let's take a look and see what the overnights did for us here. And we'll start with corn. We bring up that corn board, and it's a lot of green on the screen here today, pretty much across the board. We're up about 4 1/4 cents in that March contract to 416 and a half. We've got a 3-cent rise in the July to 439 and a quarter, and you go all the way out to the D's. That's up 2 cents to 461 and a quarter. So there you go, between 2 and 4 1/4 cents higher across the board when we talk about corn. And then I move over to the wheat. How about that wheat? That's Chicago wheat, and that's up 4 cents up front. That's March 564 evens last. If you go to the July, that's up a couple cents, 2 cents to 563 and a quarter. And the D's is up 1 3/4 cents to 586 and a half. All right, that's the wheat. I probably skipped over. Did I do beans? I didn't do beans, did I? No, I didn't. Let's go to the beans. 8 3/4 cents higher up front. That's March 1151 3/4 is last there. And that's closer to the high of the day than the low, but look at that. We didn't, I should stop talking about March. It's going off the board. Let's go right to the May. That was up 9 1/4 cents to 1160 and a half. That had a 12-cent range, and we're about 3 cents from the top of a 12-cent range. That'll probably give you a good idea about what things did. September's up 6 3/4 cents to 1152 and a quarter. As soon as we get that March off there, we can start looking at that in the NOVE. All right, let's move on to the hard red in Kansas City. This is May, 3.5 cents higher there, 568 evens last, and that's just off of the highs by 3 ticks. Not bad. About a 7-cent range overnight, so that's something to be talking about. But like I said, folks, you can see there's a lot of green on the screen. Let's move over to the spring wheat, 4 1/4 cents better there, and that May contract to 648 even. And we've got a July board up 3 cents to 651. All right, and then finally, let's take a look at cotton, see if we had anything moving. And we were limit down in that March, but you know what? Let's not talk about it. That's from the other day, too. That's not even open. Let's go to the May. That's down 72 points to 94.85. Now that we've got all that straightened out, let's bring in our guest analyst. That's Brian Oops. He's Midwest Market Solutions. He's the president there. All right, brother. Happy Monday to you. What are your thoughts? What's your macro view? And let's not get too bogged down in the details. What do you think?
Good morning, Scott. I think, this corn market, soybean market's reacting pretty much as we had been talking about them acting, putting a low in right around the delivery period, rally afterwards, change the narrative from, hey, let's sell every rally that we can see in this corn market to start talking about South American weather. Harvest is ongoing as far as corn and soybeans. The second crop of corn in Brazil is being planted. It's over 70% in the ground right now. So now you have to start talking about concerns about that crop. What happens if they get into a drought situation, hot, dry weather, hurting the yields of that safrinha corn crop? And then you start talking about the U.S. There's farmers planting already in the Midwest, planting soybeans in March. It's really crazy, but they're out there. They're doing field work. Texas corn planting will be wrapped up in a lot of areas by this week or the middle of next week. So we are changing that narrative, I think, from this corn market is in the doldrums, it's in the winter, doldrums. Now we're starting to talk about other things, and that's what we need to do to put in at least a temporary low in this market. So we saw higher weekly closes in corn and soybeans last week, a very positive technical sign. We're seeing some buying off of that, some short covering by the funds on the commitment of traders reports. And how high this rally goes, it's going to depend on weather, of course, but I think at least we've kind of broken the string of making new lows, and all this selling coming at the market. We can maybe start to see other factors coming into play.
Yeah, I mean, it's amazing what a little bit of a change in sentiment can do. You're right, and you don't have that same negative feeling we had every day coming in here and watching this thing bleed a little bit lower. Hopefully we can get we can catch a bid. But I asked somebody this on the radio show earlier this morning. I'll let you give me what you think. But where do we need to see corn and beans, broad picture for the American farmer? I know each one's different. I get that. But for the American farmer to make money this year. Now, I'll tell you what. I'll give you the opportunity. This broker said 5 and 12, $5 and $12. What do you think about that? Where would you need to see things in general?
I don't think that's too far off. I think those numbers, 5 and 12, will be areas that the American farmer will sell at if we get an opportunity to get back there. That would be.
That's what I said.
Yeah, I think we'll see quite a bit of farmers selling new crop corn and beans. And once we get there, that crop insurance guarantees for corn and soybeans have been set for the spring. They are not very high. They are the lowest for corn since 2021, lowest for soybeans since 2020. So that safety net for that American farmer is not there that it has been
Right.
over the last 4 to 5 years. They have to be making more sales this year and being a little bit more hedge prone in their marketing.
Okay, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Brian Hoops right after this. All right, welcome back. Let's see what the live cattle did on Friday, right? I'm not going to get sucked in again and think they're open right now, which it's easy to get by me here. But let's see what we did on Friday, just so you have an idea about where we're jumping off from when we start the session here in a little while. Let's go to April live cattle. They closed up $3.10 to 188.45. That's some good going. We were up $2 in the August to 182.70. So live cattle, we like that board on Friday. I do remember that. Let's see what we had in the feeders, and this one was also higher. Again, let's go to the April. $4.27 higher, 258 even, not too far from the high. Just 15 cents off the high there. That was pretty good. And we had a 405 higher in the May to 260.17. So that was a dime off the high. So we like that. So feeders and live cattle had a good day on Friday. Just to remind you, and then the hogs also hanging in there. Let's take a look at April, up $1.45 to 88.07, and that too is only about 17 cents off the high of the day. June is up $1.85 to 102.05. Look at that one, 102 and 103. Look at, we've got some decent prices there when we talk about lean hogs, ones we haven't seen in a while. All right, let's bring back in our guest analyst. That's Brian Hoops with Midwest Market Solutions. He's the president there. All right, brother, what do you think about these things? Anything? Are you expecting anything?
I think you really have to be cautious in the cattle market this morning. We had this huge rally on Friday. So April closed at what, 188.50, so 188.45. We're over $5.50 above last week's cash trade. The normal spread this time of year is about $2.50. So either the futures are really anticipating cash is going to come up $2-3 this week, or those futures have really done a poor job of anticipating where that cash market's going to be. So I think you have to be real cautious. I don't know that the cash is going to advance that much, but the futures are already dialing that in, that we're going to see 185 or 186 cash trade this week.
Yeah, I agree. That's a pretty big jump, especially that quickly. So yeah, that's something we'll have to keep an eye out for, but we're not far from opening up, and we'll see how we do out for the rest of the week. But I really appreciate you coming on. It took a lot of time up in the first segment, but that's Brian Hoops. He's with Midwest Market Solutions in Springfield, Missouri.